Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
You know, I think we have to stop talking about new highs, right? I think that's the only way we're going to get them because this is not helping.
The waiting game.
The preparation is not helping, Sonia. I mean, it's like, I think we're jinxing it, so we've got to reverse jinx it. In any case, I mean, you know, global cues are supportive. They're not too bad. US markets did sell off. I mean, equities did sell off, and I'll come to that. It was a peculiar kind of session because there was little correlation. I'll explain why. But I think, to my mind, the big cue is that US market interest rates continue to fall. The 5-year, the 10-year, the 30-year, you've got, 8 basis points fall on the 10-year, the benchmark, 30 down 12, and 5 down 5 basis points. In the last two sessions, the benchmark 10-year is down 16 basis points. I mean, that's quite something. The SGX Nifty is, of course, reacting to the 1.5% cut that we saw on the Nasdaq. It's starting about 75 points lower. 18,405 is where we will start today's session at, with an hour to go for the market opening. Guys, good morning.
Hi, good morning, Nigel. Good morning, Prashant. And, you know, our markets are virtually at those highs, right? There were record closing highs that we saw yesterday as well. The Bank Nifty hit a record high, a closing high of 42,535. So we are virtually at those levels. There is profit taking that's seen across most global markets. So it's not too much, but the Nasdaq was down about 175 points. The Dow lost about 40 odd points or so. There are some geopolitical tensions that are rising in Europe. So, you know, there's been a bit of a sell-off over there. The DAX was down over 1%. Now, for our own markets, flows have dried up a bit. FIIs have sold about 400 crores or so. DI has bought quite a bit. But this is still a buy on dips market. And there is, once again, the TINA factor, right? Because there's so many issues happening with some of the other asset classes. Like crypto, for example, the news is getting worse. Latest is that the crypto brokerage Genesis has suspended redemptions because of, there is massive withdrawal requests that they are facing. So now a lot of money perhaps is moving back into equities, and we are virtually at those highs. So this buy on dips is something that could continue, and banks could continue to be in focus as the RBI governor met with a lot of the banking heads. So they met CEOs of PSUs, private banks, etc. So, you know, banks could continue to be in focus. But otherwise, yes, there is a sell-off that's expected today, this morning. But the buy on dip strategy is something that has worked.
It has worked, Sonia, and we'll have to see if it continues to work. By the way, you said TINA, right?
Yeah.
I heard another one, Tara. There are reasonable alternatives,
Okay.
which could be fixed income. I mean, Ajay Srivastava was talking about that, right? That with a one-year kind of view, if you're able to lock in these kind of rate, these kind of yields, basically, I mean, it's not a bad idea. You got 9, 9.5, 11% on lower rated paper, etc. But that's a discussion we'll have later. Let's just quickly take a look at where markets left off. So U.S. equities saw weakness. Retail sales report was strong. It was actually very strong. So could you link the two? Perhaps yes. I mean, in any case, weakness was pronounced after the retail sales showed a very strong number. But the fact is, retail sales had no effect on U.S. yields, right? I mean, if the fear is that the economic data is starting to turn up once again, it's not exactly weak like the inflation number was, and the Fed will hike, then market interest rates should move up. Absolutely no impact on U.S. yields. So I think the dynamic which is at work perhaps is something else. Big fall in U.S. yields again. The 10-year is down 8 basis points to 3.69. As I said, 16 basis points in the last 2 days. On Tuesday, which was the first rates trading session for this week, because Monday was a holiday in the rates market in the U.S. You had so accounting for the week, Friday till date, the 10-year is down 12 basis points. The difference between the 10-year and the 2-year is now minus 67 basis points. This basically is telling you that markets mainly are not very optimistic of economic prospects slightly down the road. This is what is, so basically what's happening is the 2-year is falling, but the 10-year is falling much sharper, in a much sharper way. And the difference is, now minus 67 basis points. The dollar saw a little movement as well. The DXY is stable at about 106.4. Brent oil prices well behaved. They're under $93 a barrel, so really no problem there. I think, you get a cut. So you basically make yesterday's low as the first marker, which comes in at about 18,272, and then you get the 20-day moving average, which is further away, which is only at about 17,969. But I would say give it at least, don't jump in straight away. Let the market kind of trade for a while, the first couple of hours, see the texture, see the direction. Sometimes it's important to read the screen, and the screen tells you a lot, and then take a call one way or the other. Because, if the market has been showing a little bit of hesitation, signs of, exhaustion perhaps at all-time highs, near all-time highs, you can get setbacks before we finally climb and cross the all-time highs. Could today be one of the sessions? At least at opening, it is going to be 0.5% lower. We'll find out what happens once things start. Nigel, what are you watching?
Well, for me, the two big indicators, that's the dollar index as well as the Brent crude prices, they are well behaved.
Yeah.
So I like that, that's in terms of the global cues that are coming up. The buy on dip strategy is working on the headline index. That's the Nifty and the Nifty Bank. However, the breadth of the market has been lagging, which is a little bit worrying. Because we are talking about this brisk move from around, that 18,000 to around 18,400. That's in the last 3-4 trading sessions odd. In fact, the breadth of the market has been lagging. The mid-cap index is low. The small-cap index hasn't done much. So you'd like to see that catch up. Then you get bigger confidence that, in fact, yes, we are in a strong bull run. Yesterday, the reason that we did see a big move from the day's low is because the Nifty, well, there was some covering out there. The Nifty Bank as well, the open interest was low, and that as well did recover a goodish bit. So short covering played out. And if you look at the FI data, well, that perfectly tied in. They covered some shorts, they added long positions. They continue to remain net long on the index, close to around 65% of their positioning is on the long side now. On the index option side, well, they bought 40,000 contracts, both on the call as well as on the put side. But what's encouraging is they continue to write puts. And in 2 sessions, they've written close to around 1 lakh puts. That's giving some sort of a base because the previous session, it was close to around 60,000 contracts that were written. What are the levels you're looking at? I think the 18,300, 18,330, that could be a good entry opportunity. And I say that because yesterday there was some unwinding at that 18,300 put, but there was built up at around that 18,400 put. The premium out there was around 50 rupees. At one point in time, it was around 70 rupees. So that's telling you that 18,300, 18,330, the bulls are playing for that level holding out. And today, remember, is expiry. The bears, though, they seem to be putting in a fight, and they were writing that 18,400 call yesterday. Very, very active. Remember, the total premium out there, was around 59 rupees or thereabouts. And the open interest was close to around 86 lakh shares. So close to around a crore shares odd. Highest open interest at that strike. So around that 18,475 odd, there'll be a fight that comes in there. SGX Nifty suggests a bit of a downtick. Buy on dips likely to continue. However, keep an eye out on the breadth of the market. That's been lagging a little bit. Sonia, what else?
Also, I just wanted to mention the fall in the US markets overnight was also because Target went ahead and slashed its forecast for spending.
Yes.
And the phrase that they coined is that there could be a precipitous decline in discretionary spending. Now, this is important because this comes after FedEx and Amazon predicting a slowing down of holiday demand, and holiday season is big in the US. So this talks more about, how perhaps consumer spending could be a bit muted and the impact it could have on the economy. So that's important to point out as well. But we have lots to talk about on the show in the next 2.5 hours. So first up, we have a comment coming in from Sanjay Mukim of JP Morgan, who says that an analysis of company quarterly disclosures suggests